Our economy's been addicted to cheap money for decades now. We've been borrowing money very cheaply for houses, cars. It's one of those things where you can't get to the point where we're at today without, a fractional reserve system and without a central banking system. And so if we were just to pull the rug tomorrow, it would be, in my estimation, massively chaotic.
So we have the most intense fever buildup in the world, and we are living high off of the fruits of it. We want the Fed to eventually go away and get to sound money, but it's going to be very, very painful. And people don't realize, I think, what they're asking for.
Because like you're saying, the lack of financial education and economics, nobody would even understand. They would just blame the president.
It will hit us the hardest, us as a nation.
Welcome back to another episode of Remnant Finance. We have today here with our friend Joe Withrow, who I think I've known for a couple years now, that we've become friends through some other networks. And we're going to talk about a whole range of things with him today. But a little background on Joe. He's got over 2 decades of worth experience in finance, both personal finance and in the commercial sector. So he worked in corporate banking. He was an investment analyst with some large financial research networks, the largest one on the planet, as a matter of fact. We'll let him talk about that. Expert investor. He's authored 3 books, one that we're going to talk about a whole bunch. I'm going to hold it up right here, called Beyond the Nest Egg. We'll get you a place to link to that at the end of the show here and in the show notes. And one of the ways that I've gotten to know him, he's the founder of an investment membership called the Phoenician League, which both Hans and I are members of. So we're going to talk about a whole range of things today, probably from the Fed to investing to infinite banking and beyond. So welcome, Joe. It's good to have you, man.
Yeah, man, it's such an honor and a privilege to be here. I listened to the podcast, and it sounds like you guys have been doing this for years. I know it's a relatively new project. When did you get started?
I think our first one published, was it June or July? So it was last summer that the first one published.
Yeah, not even running for 12 months yet, but it's so crisp, it's so clean, and you guys you just work so well together. It sounds just like you've been doing this forever, man. So I love it.
It's awesome. We appreciate the feedback.
Yeah.
Yeah.
So yeah, tell us a little bit about your background. Let's start there, since you're libertarian minded, free market minded. You practice infinite banking. The things we talk about, I would say probably 95, even 100% aligned with. Well, maybe we'll suss out the things you aren't if you're not. But you didn't start there.
No, not at all. No, not at all. It's funny. So my background, corporate banking, I was right there. And this was probably one of the most formative experiences of my young life. I was right there to see the mortgage crisis in real time, and to see it from the banking side and see what was happening behind the scenes. So I got hired in 2009 or 2008, somewhere. I got hired right in the aftermath of what had happened to go to work at Wells Fargo's loss mitigation department. Now, if you guys remember back then, Wells Fargo was the bank that got in trouble for robo-stamping the foreclosures. So this was leading into the crisis. They were just signing off. They weren't reading the documents, verifying anything. They were just foreclosed, foreclosed, foreclosed. Well, that became a big thing. It was all over the news. And so it turns out that the government and the various government agencies that are involved in mortgage originations, they came back and said, oh no, we can't do that. We can't have this on the news anymore. You guys have to fix it. We don't want to see foreclosures on the news. And so these various agencies, and so we're talking about, Fannie Mae and Freddie Mac are the pseudo government entities that are at the heart of everything. But you've got FHA, and then there's FHA loans, there's USDA loans, there's VA loans. You've got these various government agencies, and they each have certain I guess, influence over the character of the mortgages or the criteria. So these agencies came back and they offered to pay the banks a flat fee for every loan modification that they did. And so for the banks, the incentive flipped overnight. Now, the building I worked in, loss mitigation building, it was right next door to that foreclosure building. Okay. They fired everybody in that foreclosure building except for a couple people, and they hired a bunch of people. So they just building moved next door because we can't foreclose anymore. Now we're modifying so we can get paid by the feds. So the way that worked, and it sounded benevolent at first. So the loan modification, it was simply the borrower who's behind submits a document claiming hardship. They had to present a very basic financial statement, monthly income, expenses. And then we were to look at these things, look at the loans, and if we could qualify them, we would take the past due balance on that mortgage, capitalize it, put it back at the end of the loan, stretch it back out 30 years. We'd fix the rate at whatever I worked with HUD and FHA. So whatever they said the floor rate was, that's where the mortgage rate went. And so in some cases, we could get the monthly mortgage payment down because we're stretching the term back out. And anyway, so it looked good on the surface. But as I started to come through and I'm listening, this is in a cube farm, right? So there's probably, I don't know, 70 of us, and you can hear other people. And one thing I started to notice, anytime a borrower would not qualify for a modification, it was because they had to show affordability. They just had to show that after we modified this loan balance, they would have more income than expenses, whatever that number was. Well, I started to realize what did the banks tell them? What were the reps telling people when they couldn't qualify? Oh, just send in a new hardship letter. You got to wait like 15 days. Send in a new hardship letter and just make sure that your income exceeds your expenses. How can you make sure your income exceeds expenses? Well, same thing way we got into the mess with the no doc loans, right? The liar loans.
Right.
Oh yeah, I make $400,000. Okay, approved. It was the same thing. It's like, okay, they just tell the banks that you make more money than you do, and you can get the modification. So because the banks were incentivized just to do the modification because they got paid. So anyway, I started to see this, and I started to realize, hold up. If you remember in that climate, real estate prices, I think on average in this country came down about 30% or so in the wake of 2008. In some markets, they got cut in half. And so real estate prices were plummeting. Then I started to notice, you go into default, and especially if you go into the foreclosure process, you've got attorneys that are billing fees like crazy. I mean, pretty much daily. I mean, those fees are compounding. And I started to realize we weren't forgiving those fees. They just went into the loan balance. So people were coming out of this process with a larger loan balance than they had coming in. Meanwhile, the property values were declining. So I raised my hand in a monthly meeting, and I just asked a simple question. Hey, is anybody tracking, loan to values on these modifications? Anybody keeping an eye on this? And I was shut down real quick and told to keep my mouth shut and do my job and all that. And I started to realize that we were putting so many people underwater on their mortgage. And it was just, there was no long-term thinking at all. It was kicking the can down the road. So,
And these were people that had already defaulted, right?
yeah. Oh yeah.
They're already in a mess.
They're already in a mess. And so now, and there's like those fees, had they walked away from their mortgage, right? You go through the foreclosure process. Well, in 7 years, that's expunged from your credit record, and you don't pay those fees. Like, in a sense, they were capturing those fees too, because, okay, we're going to make sure that these guys have to pay them. Even if it takes 30 years, darn it, you're going to be on the hook for these things.
That to me resonates with something we talk about a lot is who are the players in this game? And in our counter-conventional paradigm, as far as how we approach capital and control, et cetera, we talk in a previous episode, we've talked about how there's you, and then there's the banks, financial institutions, and the government / IRS. They're sitting across the table from you, and you're playing chess against them. And they are going to win no matter what. If I don't follow the rules, if I don't pay my taxes, if I commit fraud, I'm going to jail or I'm heavily penalized. But I don't get to not follow the rules. But on the other side of the table, the government, the financial institutions get to make the rules and then break the rules.
Change them anytime they want. Or break.
And what you said about how you guys just flipped overnight, all of a sudden, we're going to change strategy. We're going to do a 180 because now we just got an incentive to do the opposite of what we've been doing. So everything we told our customers up to that day is now becomes a falsehood. And now we're doing something else with their money. And now we're approving them. Now we're not approving them. Like, they're going to win. And so if you don't have any certainty in place and you're following the conventional model of trust the financial institutions and their advisors to tell you how to win the game in a game that they can't possibly lose, you are hoping that everything goes right, and you need the best case scenario to not lose. They will make sure at all costs that they cannot lose. And so it's just that resonates so strongly with how we approach that.
Yeah. And it's that for me was so eye-opening because I was in my 20s at the time. And it was, I had the same, mainstream belief system. It's like, banks are the pinnacle of capitalism and governments, as this noble and benevolent institution. I believed all that nonsense. But then at the same time, and this is how we come in, you mentioned the libertarian viewpoint. At the same time, I started to watch the presidential debates for, especially, yeah, I was more involved, I guess, in the 2012 cycle, but Ron Paul's two big presidential runs were 2008, 2012. And, I'd never voted before. I never cared, but I had this mindset. Well, let me start watching these debates so I can decide who should be the next president. Like, of course, not knowing anything of substance about anything, how am I qualified to make that decision? But anyway, this guy's up there and he just keeps talking about things like we need more liberty and gold and Austrian economics. And I'm like, what in the world is this guy talking about? I've never heard any of this stuff. So I had to look him up on the computer. And back then it was, just very, what wasn't as easy as it is today, but there was still plenty out there. And I was like, ran for president for the Libertarian Party in 1988. I'm like, what in the world's a Libertarian Party? I did not know after, I don't know, 16 years of public education, I did not know that there were more than two parties in this country. I did not know that there was third parties were a thing at all. No idea. So anyway, that was my mind was ready for what the guy was talking about because of what I had seen in the banking world and the collusion between the banks and big government.
I want to kind of tie that into the Fed, if that's cool, because that's what I'm dying. That's what I'm dying to talk to you about. My family's been kind of sick the last couple of days, and yesterday was like the peak of it for me. And I was like, I'm doing this interview, even if I don't have a voice, because I'm so excited to ask these questions. Along those lines, as far as something that we hear a lot in the Fed, the idea that you put out in your book and in your newsletter, I want to hear your thesis on the Fed, because I'm very interested in this topic, and I came to a very similar conclusion without the underlying, like without the analysis of who the actual factions are. And my idea was, be careful what you wish for. In reality, none of us want the Fed to end right now. I want to not talk on this for an hour like I could, but I want to hear your theory on it, and I want to hear the overall thesis, because I think that it's super important to understand who we're up against, and that there's not this jump from what we all want and what we think we want is end the Fed and then we go to a gold standard. One, a gold standard doesn't work without fiat. It just doesn't in a global economy. And two, you're not jumping over to this perfect gold standard and system that we think utopia would be. There is someone else waiting in the wings, and that fight is one of those is going to win. So the gold standard is not going to win. But can you talk about that thesis?
Yeah, there's a couple of angles there. We'll talk about the factions in just a minute, but I think the first, just kind of setting the stage, because I'm very much a Jeffersonian, Rothbardian on this issue. There was fights early in the United States history over should there be a central bank, and Alexander Hamilton was a big central bank guy because they wanted to basically replace the British Empire, as I understand it, whereas Jefferson wanted this to be the land of individual liberty and decentralization, all those things, and I value those ideas. I'm sympathetic. And in fact, I was 100% on board with the whole end the Fed. I don't know if movement's the right word, but whether you came through it by reading, G. Edward Griffin's The Creature from Jekyll Island, or which I have, but I was exposed through the Ron Paul presidential campaigns where the Fed was a central issue to him. We got this idea in our head that the Fed was basically the head of the snake, and that it was the one thing that was perpetuating the various things that we don't like about our government, the things that we think it should not be doing or spending money on, and all the rest. We had the mindset that, oh well, if it's bad, just get rid of it. But the reality is, what would replace it? You look at this past election cycle. You had these far left socialists who were campaigning on in the Fed, and it's not because they want sound money. It's because they want to have more control, more control over the monetary system. They want it to be more centralized. And so you guys talk about order of operations. And I think that's very important here. If we want to transition to a better monetary system, where there's got to be some type of transition plan in place, and you have to have some, level of confidence that it can and will be implemented. And so if the Fed were ended tomorrow, what would replace it? Well, I think the we start to talk about the globalist faction in a minute, but the whole central bank digital currency thing, I think that was a play to dislodge the legacy financial system, which they would be all for in the Fed. I mean, which is kind of ironic because the central bank, the Fed's a central bank, but it's an element of a different power struggle, which we'll talk about in just a minute. But the other thought I had about that was, that we've been addicted as a society. Our economy's been addicted to cheap money for decades now. We've been printing trillions of dollars a year for a long time. That's why we've been borrowing money very cheaply for houses, cars, whatever else. Everybody's got a credit card. Does anybody still pay for anything in cash anymore? I'm not sure, but it's one of those things where you can't get to the point where we're at today without a fractional reserve system and without a central banking system. And so if we were just to pull the rug tomorrow, it would be, in my estimation, massively chaotic. So that's not apologizing for the Fed at a moral level or an ethical level or a desirable level, but from a practical level, I mean, if we're going to move away from this current system, there's got to be some type of transition plan in place. So those are my thoughts. Saying, very similar to you. I mean, you can't get a 30-year mortgage without having a fully functioning system of credit. So
Yeah.
Power factions. This is where I started to come around to that conclusion with the Fed and a number of other things. So my experience only goes back, in terms of paying attention, only goes back to really the 2008 financial crisis. This story goes back farther. But you remember 2008, we've got the crisis, and then Ben Bernanke comes out and we get TARP and the 800 and some billion dollar bailout, which seemed massive at the time. Today that's like so tiny in comparison to what they do. But we get that, and then Bernanke comes out and he says we must coordinate monetary policy with the world central banks to push interest rates to zero and keep them there, to save the financial system and all that stuff. And so what that was the by nature the deep state, like the idea that they're all on the same team. The Fed, the European Central Bank, the Bank of England, they were all working together. We learned about the LIBOR scandal in 2012, where they were spoofing interest rates essentially, in
Yep.
addition to the Fed's suppression and the central bank suppression. And so they were all on the same team under Bernanke. I think I call them the globalist faction because they are, globally coordinated. They seem to want global governance of some kind. They want global hierarchy. They're not very fond of national sovereignty. They're certainly not fond of local sovereignty. So I just call them the globalist faction. Fed was a part of that structure in 2008. Janet Yellen continued all the same policies, all the same ideology, and when she came in as Fed chair, succeeding Bernanke. And so I just assumed, I assumed that they had control and that only their people would be Fed chairs. And that was my thought with Jerome Powell up until I think it was, I want to say, a conference late in 2001 or maybe early 2021 or maybe early 2022. It was a conference where he's up there with Christina Lagarde of the ECB. And she's up there and she says, yeah, and going forward, the world's central banks are going to have to collaborate to combat climate change. And then she goes into her whole spiel about why this is like the key, challenge of the day, and it's somehow central banks can stop climate change. But anyway, then Jerome Powell gets up there when it's his turn to speak, and he says, yeah, the Fed, I've got a dual mandate, stable prices and full employment. That's my job as Fed chair. We have no role in social policy. We have no role in climate change. We're just going to do our job. And you could see Christina Lagarde was just like, there was like smoke coming out of her ears. Like this is not supposed to happen. And so you look at that and it's like, oh, something changed. And then you get to the point where I think it was March 2022, Powell starts raising interest rates aggressively in the US. And in October of 2022, the United Nations comes out. And of course, everybody was yelling at Powell. Not just the establishment, but investors were too, because it was blowing up the stock market, But October 2022, the United Nations comes out they put out this policy paper saying, I don't know how many millions of people in the developed world would, be impoverished and starve to death. But they said it's irresponsible to raise rates and all central banks must stop raising rates immediately. And so it was like, they were very clear, like that was directed at Powell and the Fed. You guys have to stop. Well, it's like a week later, there was an FOMC meeting and Powell hiked it another 75 basis points. And at that point, it's like, something's changed, but this is not what I thought it was. And so then you
That
start
was
to
like a
come
big FU to the world banks.
Yeah. And then you start to realize, I mean, this is the height of the Great Reset push and the central bank digital currency. Then if you look at that, like we thought this was an attack on us. Like, oh, they want to control our money and track us and everything. Well, they can do that already. Maybe it takes an extra step. But really, you look at it, what's left of Wall Street? What's left of the New York banking system? What left of commercial banks? What role do they play if it's a central bank digital currency? And the money's created at the central bank and it's controlled. Everybody's accounts at the central bank. The commercial banks need deposits. They make loans based on deposits, and they generate a enormous amount of power, wealth, and influence from that. And there's all kinds of second order effects that come. So anyway, I think the key power struggle. This is oversimplified, but it's been the globalist power structure. First, the New York banking scene. The guys who benefit from the current legacy financial system, and they don't want it to change. There's certainly other factions in there, smaller factions, but that's kind of the heart of the struggle.
With that thought, like what was I don't even know what's the background of like Bernanke and Yellen prior to them being the chair of the Fed?
Academia. That's it. Whereas Jerome Powell worked on Wall Street. They call him private equity Powell on Wall Street. He made $100 million on Wall Street, allegedly. So I read. Bernanke and Yellen, they were academics, teachers. They were not wealthy. They're foot soldiers. How'd they make their money? They made it after they did what they were supposed to do because they got their, $1 million book tours and their speaking fees and all that stuff. Just foot soldiers. And I'll tell you one thing. If you go back to towards the end of Janet Yellen's tenure, they were trying to push the whole idea of the unrealized capital gains tax, right? And it was at the peak of that push. And she gets out on TV, on whatever channel it was, and she's like, yeah, I think, and they were asking her about it. And she said, well, I think what would be imposed is, well, a tax on unrealized capital gains. And there was no conviction behind what she was saying. Like when you talk to somebody who believes in something, they sound a certain way. She was just saying whatever talking points she was supposed to say on television. Like they were completely under somebody else's thumb. Whereas Jerome Powell has, you make $100 million, there's a certain degree of autonomy, I imagine, that comes with that. So
that in particular, that was one of those places where that was initially kind of introduced, because we talked about that. We had Neil McSpadden on, and we were talking about Kamala, talking about unrealized or tax on unrealized capital gains. And it kind of like, we talked about how certain words become part of like the national language. And it's like, when you first hear that, you don't know what it is. Nobody thinks about it, but it just keeps getting spoken. And finally it becomes part of the conversation.
Very insidious, right?
Oh, it really is. And later on, Nancy Pelosi was talking about it, and then Kamala had it as part of her talking points. And so it just wasn't going away. So we did. I don't know if you watched the episode with Neil where we talked.
I did. It's been a while. That one was a while back, I think.
Yeah, that was a while back. That was during the campaign still. So that was quite a while ago. But yeah, it's pretty wild that I didn't realize that was first Janet Yellen talking about that.
Yeah, I remember because it was just like, I mean, she had no conviction. She was just blabbering and stuttering. I mean, just basically Kamala Harris's entire presidential campaign in a soundbite. But
yeah, it's kind of like how you go from, a pharmaceutical company board to the FDA and then back. It's just kind of that blob. It's the same thing. Like Janet Yellen was the chairman, of the Fed, and then she was the Secretary of the Treasury.
Like, how does that work? Is that the Fed's supposed to be an independent organization, isn't it?
Yeah.
They say that. Now she's the treasurer. And that's a good point I should bring up. This is it's another one of those breadcrumbs as I was kind of developing this thesis. So you had Powell raising interest rates, and Janet Yellen, as Secretary of the Treasury Secretary, announced the Treasury buyback program, which was effectively yield curve control, where she would buy long-dated Treasury bonds and sell short-dated. It was Operation Twist. It's what Bernanke did, 10 years before.
Another example of they can't lose at the game where they write the rules and change them.
But here's the thing about that, though. It's always been done at central banks because they're the ones who can create the money. The Treasury can't create money. So it's like, why is Janet Yellen doing a buyback program where the only way she could do this is if she sold more short-term bonds to buy back long-term bonds? And the point was to keep long-term interest rates from rising as much as they otherwise would. But she can't print money to do that. So this is something that if you believe that this is something that should be done, it needs to be done at the central bank because they can create the currency. So why wasn't it? It became clear they were on different teams. Janet Yellen and Jerome Powell were fighting each other as far as monetary policy was concerned.
And I'm fascinated. I don't know where you were going to go, Hans, but what fascinated me the first time that I learned about this, when I first read your book, right when it came out, was the discussion of the European central banks.
Yeah.
And that ended up becoming a battle between them and our central bank,
Yeah.
and under Jerome Powell. I came from the same place. It was like, end the Fed. I was all in Ron Paul, just end it, cut the IRS, cut the taxes. I still would love to see all that happen, but it's like we kind of got to a point where you had to root on our central bank, our Fed, because they actually had some American interest. And I mean, we would have had a total collapse if we became part of the world economy.
Just to differentiate these two sides we're talking about for people that haven't read some of these books or don't really understand what, like, people don't know what the Fed is until you start down this path of trying to learn about macroeconomics. The Federal Reserve, they call it like a banking cartel, but it is owned by basically the New York banks are the alleged shareholders of the private company that is the Federal Reserve. It has different branches across the country to kind of give it the illusion of being, less dispersed than the New York banks, but the New York Fed is the power broker of the Federal Reserve. And so the New York banks, like the banks that we can all name, are essentially the board of the Federal Reserve or the shareholders indirectly. And so it's like when we're saying the Fed, it gets tied in with the Treasury, it gets tied in with the federal government, but it's not. Let's keep that wrapped up with New York banks. So when we're talking about the Fed and the chairman of the Fed, who represents the interests of banks, specifically New York banks, I think it's good to break out, like, we can call it the European Central Bank versus the New York banks that we could all name. Those are the kind of the two factions. Because if we keep using the Fed, the intention of naming it the Fed is to blend it in and let it camouflage in as part of the federal government, but it's not. So I think moving forward, that's the differentiation for people that aren't familiar with this. New York commercial banks versus the central banking structure, even though, yes, the Fed is a central bank, but that's kind of a good distinction, I think, to make.
And the tie-in there, which is one of the reasons I asked you the background of Bernanke and Yellen, is that Powell came up as a player in banks, in the New York banks and Wall Street.
For at least a couple of decades now, it looked like their interests were aligned when we talk about the New York banks and the European financial system. But it all changed, at some point. I mean, it became evident in 2020 when the World Economic Forum announced its Great Reset plan. They laid out the planks. I read through that darn thing. They've got a policy paper in the different planks of the Great Reset. The, kind of the core to that was the central bank digital currency idea, which is where you're going to have programmable money at the central bank that the central bank controls. You're going to have an account at the central bank. Commercial banks are no longer, well, it's not clear how they would be a part of that, but that was never mentioned. But anyway, in 2020, the World Economic Forum and Klaus Schwab rolled this out. They launched a commercial. I don't know, did you guys see the commercial where they had the younger guy smiling? And the tagline was, "You'll own nothing and be happy."
I remember that phrase. I remember him saying that.
You won't own any homes and you won't own any business and you won't own, this, but you will be happy, and it's like, I don't know who in the world would go for that commercial, but that was their commercial. And I've got, a screenshot of that darn thing. And then all of a sudden you started to see all these policies come out, from the whole net zero policy to get rid, the attacks on traditional energy production, all the censorship stuff, the DEI stuff. All those policies were part of the same push. And you looked at what was happening in Europe, they were 100% on board. They were pushing this, they were funding it. You look in the US, there's some banks that were on board too. Bank of America, ironically, is the biggest supporter. I went through, I read Bank of America's annual letter to shareholders every year, and JP Morgan's. I'll come back to that in a minute rather than get off on a tangent. But all of a sudden Europe was instituting these policies and pushing them as far as they could go. How do they do that? They do that by leveraging the eurodollar market. So the dollar, US dollar, is the world's reserve currency, de facto reserve currency. Every major central bank, every major financial institution in the world holds dollars. They hold treasury bonds. Treasury bonds are essentially the world's reserve, collateral, world's reserve asset. And so by keeping rates at zero and by flooding the market with liquidity, it enables, I guess, the European financial institution to leverage Eurodollar. So it's a fractional reserve system. So for however much they have in, treasury securities and dollars and offshore accounts, well, the banks can lend against those, to 10x or whatever that number is. I'm not as, in the US, I believe it's about 10x, but anyway, the more liquidity, in the system, the more those institutions could leverage that liquidity offshore to push these policies. So when Powell started raising interest rates, this is what nobody saw, and I didn't see many analysts talking about. It was draining the eurodollar market of liquidity. Those eurodollars were disappearing rapidly, and I've got the numbers right here. Let me see here. So when the U.S. was raising rates, nearly $600 billion in foreign direct investment came in over that roughly 12-month period. So this is foreign dollars that were offshore coming back in to invest in U.S. assets, namely treasuries, because all of a sudden they're paying a rate of return. So investments coming in, flowing out of Europe. And in fact, Europe, I've got it written right down here, they experienced the largest capital retrenchment since the 2008 financial crisis. So liquidity was just drying up in Europe, and they were in a much worse financial situation. And it forced them to also raise interest rates to try to stop that leak. So it's all about the flow of global capital. I don't want it to be this way, but it seems to be that global capital determines everything. How's it flowing? Who controls it? Because who controls it is who dictates what gets funded. And so when you started looking at that whole push, by raising interest rates, Powell was directly attacking the European system and defending the American interests because they wanted to displace, the legacy financial system. Conventional energy was a big part of it. They're funding all these renewable energy projects, and now their energy costs are through the roof in Europe. But if you read the Bank of America annual letter, ever since I think it was 2020, it might have been 2019, Brian Moynihan, the CEO, talks openly about implementing stakeholder capitalism, which is the polite name for the Great Reset. Now, I worked at Bank of America. I was on quarterly calls with that guy. I can tell you that he can say more words and talk longer without saying anything of substance than anybody I've ever met. But he is the perfect used car salesman. There's no substance to that guy, but big supporter of all that stuff. Meanwhile, if you look at JP Morgan's, you start reading those annual letters, and somewhere around 21 or 22, there was a definite change in the narrative. And all of a sudden, JP Morgan CEO Jamie Dimon's talking about, I'm a red-blooded American capitalist. We need to fund oil and gas. These things that are just very dirty words to the globalist push, the globalist agenda. And there was a very clear split. And so maybe I got too far off topic, but it was clear that the US based interest they wanted to save the legacy financial system. As it exists, the power rests in New York, whereas the Europeans were trying to move us to something else. So that's the big power struggle. And that's what all this political stuff's been about too. The crazy political movements. It's all, now I don't think they realize it at a certain level, but all the people pushing the crazy left-wing stuff, they're just supporting the globalist push.
Yeah, and I think that our community gets so focused on what the problem is without any solution. The Nelson Nash Institute and the kind of sound money theorists in the Austrian School of Economics are the only ones who have put forth any kind of alternative that I've seen, which is there is a roadmap that theoretically we could unwind the Fed's role and create a sound money system. But just, it's kind of like you said, we're addicted to this free money. It's like we've got this huge toxic load building up and your body needs a fever. And our fever is going to be so intense when it happens if we were to just end the Fed as it is. Especially reading Nelson Nash, reading Creature from Jekyll Island, you get this idea that banks are inherently evil. fiat money has to go, which like philosophically, there's some truth to that, but practically, we're not going to not have banks. We're not going to not have fiat money, because if we just have gold, there's not enough to facilitate the amount of transactions that happen. Like, just the derivative market is orders of magnitude higher than the actual money supply, and the real transactions that are happening, the derivative market balloons that. So like, that's not just going away. We can talk fantasy about ending the Fed, but like, these monster real estate develop, like, it's not just all going to go away. And so the idea that the Fed's going to go away, things are going to be great, we're going to go to sound money. I mean, in principle, it is the goal, but without a roadmap there that fully stiff arms the globalist interests, like, they're right there. Like, we're starting to seem like we're kind of walking a, breaking that 50-50 split and a little bit in favor of us. And our interests are aligned with the New York Fed. Like, I can't just go. I mean, I can because I'm doing IBC now, but most people, when they're talking about buying a car, when the time comes to get a car, like, most people, almost everyone's thinking about financing in some way,
Yeah.
right? And now we talk IBC, we go pay with cash because we take a policy. Like, you can go and do it optimally and own the note yourself, but at the end of the day, we can't just go buy a house in cash. And if you want your labor to be, like, the value you provide with your labor to be commensurate with your spending power, which is what this would entail, losing the Fed, losing fiat, losing world reserve status. It's like, you have to actually earn enough to go buy a brand new F-150, which you cannot do, because the only reason you can get into a new F-150 or this new house is because we are leveraging, because there is this mountain of fiat, and there's this whole structure that's here, which benefits us. So we have the most intense fever buildup in the world, and we are living high off of the fruits of it. We want the Fed to eventually go away and get to sound money, but it's going to be very, very painful. And people don't realize, I think, what they're asking for when they say end the Fed, because it will hit us the hardest, us as a nation.
Imagine what they'd be telling everybody who, I mean, we're not very economically literate in this country. Imagine what they'd be saying to everybody about why you can't, you can't find, your finances are dried up and all these things. I guess it's important to point out there would be, a credit system within a sound money economy. It would just be different, and it would be much more, I guess, very, very buttoned up in terms of risk reward. I doubt 30-year mortgages would be a thing. Maybe you'd find somebody, but
So we definitely don't need it, because there was a time before 1913 when we were still prosperous. But since then, we've become such a consumerist society that it would be a massive rollback on almost all Americans' way of life, at least temporarily, and would be painful. And then the politics involved, because everybody would just blame, whether it's Bidenomics, Trumponomics, whoever the next president is, nomics, nobody would ever actually, because like you're saying, the lack of financial education and economics, nobody would even understand. They would just blame the president. They wouldn't understand that this is this 1913 creature that has wrapped us up and created the toxic load that Hans is talking about.
And that financial literacy piece is huge, because think of what they got people, like, the minimal amount of economic pressure it took to get people to take a fake shot for an illness they didn't have, right? People were taking vaccines for a donut or like a lap dance, like, people, like, do you think that the centralist bank, like the European Central Bank, that globalist faction will have a compelling narrative to get you to adopt their system? Hey, here's $3,000 of credit to start your CBDC account.
I'm sure that was their plan. Yeah.
And people will do it.
People will do it. And so the education's not there. We're hoping to contribute in our small way, and the same way you are with the Phoenician League, to getting that economic literacy there. And for us, for our audience, for people that are doing IBC, people in the Phoenician League, your entire message, which I think would be a great time to transition to what you do, your asset allocation, how you kind of position. What our goal should be is not really worrying about ending the Fed. It's getting ourselves and our families out of that dependence, because we can't personally go to a gold standard, but we can get to where we don't really need to worry about this as much. It's a step-by-step, small incremental process to get there. But what is your, if we're ready to switch gears here, what is the kind of the pitch of the Phoenician League? What is your asset allocation? How do you view getting out of this system, not getting out of the system, but optimizing within it?
Yeah, there's elements of both, but that's so, it's so spot on. If the more financially independent you can become, the less impacted you are by, the various chicanery that exists out there. It's very easy to put inflation to work for you. That doesn't offset the fact that it really has a very, very insidious impact on civil society and most folks out there, which I hate that. But we can combat it. It's not terribly difficult. So my philosophy and the approach that we advocate at the Phoenician League is financial security first, and then financial independence. So order of operations, right? Order of operations. Financial security is really, it's just the ability to, this is my definition, the ability to weather any storm or disruption in relative comfort for a reasonable period of time. So if you were to lose your job or a primary source of income, or to have some type of emergency of some kind and couldn't work or had extra expenses, well, you need to have some type of reserve so that you can handle that without it, flipping your life around and worrying you to death. So you could say, okay, save money. And essentially that's what it is, but we don't want to just save money in a bank because that money is losing purchasing power over time and we're foregoing the opportunity to earn a rate of return on it. Although they will pay you 3.5% on their money market now. So it's more than nothing. But anyway, the approach to asset allocation, the cash, and I know you guys, you guys are all about this, but I think holding most of your cash in IBC policies is what makes the most sense for a number of reasons. But I think it's good to have an allocation to gold as well. I prefer to have gold on person store, a little bit in a safe here, just to have it. If you have it, nobody else, there's no counterparty risk. Nobody else has a claim to it. Recently, I've been looking into the United Precious Metals Association, which I think is very interesting. Are you guys familiar with that one?
No, I was going to mention monetary metals, though. I don't know if you're familiar with that one.
Very similar. Same guys are behind it. Although I think monetary metals is a much larger. I think it's geared towards much larger. I don't know if investors is the right word, but I think there's a larger minimum where the UPMA you can just start investing $10 into gold, on a regular basis. But then you can they have a system where you could just I could pay you $20 in gold or whatever. And they're building out a business directory where you can start to accept payments in gold. So it's a way to, to make gold it's almost like a way to Bitcoinize gold, so that it can be.
Make it a little fluid.
Yeah. But so anyway, that's another way to own gold. But I think it's good to have an allocation there. I love Bitcoin, allocation to Bitcoin. I personally, I do have a stock portfolio as well. And I'm not investing in, the latest hot trends though. I like to, meaning I'm not investing in what they're hyping up on CNBC and those types of things. And oh my gosh, there's going to be a new contract or whatever. My mother-in-law got burned because they told her that there was this one little EV company, electric vehicle company, that was going to get the contract for all of the United States Postal Service. So she bought that company. Of course, it went bankrupt. But anyway, we're investing in larger trends. I've been investing in conventional energy, which those have done well. I love property and casualty insurance. That was a play on rising interest rates for various reasons. So anyway, we kind of partition out the stock portfolio into these different buckets based on longer term trends that aren't just the latest hot stuff on the news. But the idea is those assets that we just mentioned they're all liquid. Even gold's liquid. I could sell my gold to my dealer, tomorrow if I wanted to. So if you did have a situation where you needed to raise cash to pay extra expenses or living expenses, you could always liquidate these investments very easily. But if you do it right, those things together are going to provide you with a much more resilient asset portfolio, and it gives you financial security. And from there, then you can start getting into assets that are going to build cash flow. Real estate, which know you guys are in. I'm starting to get into mortgage notes a little bit. Kevin Stokes got me into those. It's the other side of the coin to real estate. There's some trade-offs, but there's some compelling advantages too. And then there's all kinds of other alternative funds and things you could start to do just to generate consistent monthly income, or in some cases, quarterly income. And then the idea is there, if you just systematize that over your working life, we think about investing in an IRA and people are like, well, yeah, in 30 years, maybe I'll retire. Well, if you start making these investments in assets that produce income, you're probably going to be in a point within 7 to 15 years to where you've got income that could support a high quality of life. It depends on your personal lifestyle and your personal situation, but it shouldn't take that long. 7 to 15 years maybe to get to the point where you have serious monthly income from your assets.
And it's a big snowball effect. The
Yeah.
like if
Yeah.
you're talking about buying rental real estate, the first 2 to 4 are hard because you're likely taking money from your income source to buy that.
Yeah.
Then
Yeah.
ultimately, each one of those, you're taking money from those and your income to buy the next one. And ultimately, they self-fund the next property and the next
Yeah.
property, and the next property.
And it's,
And you get to a point,
yeah.
like you're saying, 10 years out, where you can stop buying more if you want, because now it can just fund you and your lifestyle.
Yeah. And then if we project that out, we look at the conventional retirement plan. Okay, what do? We save money in these retirement accounts. Then when we retire, how do we get income? We sell our assets. So we lose the assets. We got to pay tax on those assets at whatever the tax rate happens to be at the time. And then we just hope we don't run out of money, right?
That's it. That's what I was just saying. And when are you going to be done selling those assets? I don't know.
Yeah, either I'm dead or I'm gone or the money's gone. That's the only answer. Whereas if you have these assets that produce your income for you, you don't need to sell your assets, which means you don't need to pay tax, which means money's not going to run out. You could potentially continue to make investments. And then if you're wise about estate planning, you can pass down what you've built over your lifetime to future generations. And maybe we could get rid of this idea of a rat race and a hamster wheel. IBC is such an integral part of that too. You put it all together, like our kids and grandkids shouldn't have to worry about money. And then they can make decisions based on what they think is right, what they're passionate about, what they believe in, and live purposeful lives. Opposed to, I spent, I don't know how many years at least 20 years of my life just making decisions for financial reasons, and it's like, all it takes is one generation to build it.
That's a big change from, we always talk about the boomer narratives that are falling apart. And,
Yeah.
we're all pretty close in age. So we've all experienced those narratives. But I remember being a kid and like my dad would not tell me how much money he made, what things cost. It was just like, you weren't supposed to ask an adult what they're doing with their money. And so you end up entering adulthood blind to how to handle your own money, what you should be making, what you should be spending. It is a strange thing. Like I sit and have conversations with my 10-year-old about what I'm doing and what it costs and what that means. And then just don't tell your friends. But I want you to know,
Of course, they tell
Yeah,
the friends anyway. I've
they
learned
do
that
it.
they don't keep secrets, but I do the same thing because that's how they're going to learn.
Yeah.
Um,
Why not
Dude,
be an open book with that? This is your family.
that idea that you're going to, like, every generation is supposed to just kind of start from scratch, figure it out, make all the exact same mistakes, get to a point where hopefully, maybe if everything goes right, you get to quote retire and just, golf out your days, that we don't need to keep starting from scratch. Like my daughter's almost 4, but I'm mostly joking right now, but I'm telling her, like, this is the family business. This is what we do. We got these dope hats in recently, this Remnant Finance hat, and I had her help me, and I was like, hey, just trying to, very basic level at a 4-year-old, but you're helping me. We provide value to people. You're going to help me do my business. I'm going to pay, I give her $1 for helping me sort out the hats and stuff. And we talk in the our child policy episode about the power of this and how, the policies that we're putting in force for our children now, those alone are going to ensure that they're never in the situation that Brian and I and a lot of our listeners are in, where the carrot dangled in front of us is financial, this pension, this, are you going to violate your convictions to maintain this financial carrot? We've removed that from them having to make that decision. And I want to quote just a few things from this great book here, Beyond the Nest Egg, written by a wise man named Joe Withrow here, along some of those ideas, talking about, part of this book is like kind of a thesis to how do we create, just to put a number on it, you say $10,000 a month in passive income.
I think at that point, for most people, you're good.
Yeah. This is sort of a roadmap here to get to just how to think that way, whatever the number is for you. But you say that at the end of the day, the name of the game is debt and taxes. And then sort of the overarching strategy, acquire cash flow assets with fixed debt. And that speaks to the, you lock in a 30-year mortgage, assuming inflation continues, the amount of work it takes to make that payment diminishes over time. So acquire cash flowing assets with fixed debt, follow the tax code to reduce or eliminate taxes, and buy more cash flowing assets. And then on the kind of the problem with the conventional model, there's too many restrictions, too many uncertainties, and too much left to chance. In fact, the traditional model forces us to take the roundabout way to retirement. It herds us into piecemeal investments that we buy today, hoping only to sell them years down the road. This approach puts us on a seesaw. in our working years, we pour our savings into financial assets. Then when we retire, we sell those assets to create income for ourselves. When our assets are going up, we don't have extra income. Then when we want more income, we have to sell our assets. And it's just such a great synopsis of the problem with this model, that, you know, the proof is in the pudding, and we want something different for ourselves and our families than what we've been trained by the financial institutions to do.
It's pay them all the fees. But I've thought about this quite a bit, and just not to bash on the baby boomer generation too much. The model I think it did work out reasonably well for them. And I think about it, especially in my family, there was a clear jump. My grandfather worked on the railroad, blue collar. That was it. His wife stayed at home, took care of the house, raised the kids, all that stuff. Very, very modest. But they put, it's bad, I don't know this off the top of my head, but 5 kids to college. First ones to go to college, right? And that was when the college was still a gateway to success. Today, I think you could argue that that's changed quite a bit. But they go to college and they all got high paying professional jobs. And so for them, compared to where they came from, they invested their money for, 40, 50 years largely in the stock market. And because the Fed was pushing out cheap credit, dropping interest rates, stocks basically have levitated for that entire period of time. So the model, it did work out reasonably well, or at least up to this point, it has, I think, worked out reasonably well. So I've thought about it. It's like, well, you know what? From their perspective, since it worked out pretty well for them, like if they're looking and saying, well, I've advanced from my parents' generation, here's how I did it. It makes sense that they would, tell the kids, okay, yeah, just do this, it works. But the reality is that, there's dynamics are always changing. Markets have changed, the economy's changed. And of course, that whole model was in some ways or another kind of elevated on massive amounts of increasing debt. And at some point, that comes to the end of the road. And I think we're about there.
And I just wanted to tie all the way back, because when you first started talking about what you teach, and I think it parallels so well with what we teach, which is protect, save, grow, in that order. Yeah. And like you talked about having a protection as like, how long can I sit? 6 months, couple years on what I've done if something bad happens. We talk about it in a lot of ways from the insurance standpoint of protecting against life's inevitabilities of something coming along that can destroy your wealth. Yeah. And so nobody thinks about on the insurance side of that being first. And then we teach, all right, now let's figure out how to save. And once you have a good foundation of savings, which we do within life insurance, then how to grow. And so I think like what we're talking about are just, they're so closely parallel that it's a perfect fit. So real quick, what is the Phoenician League and what do you do? Now, Hans and I know, but go ahead and give your pitch for it, man. I just want to tell the audience, like I was, I think, one of your inaugural members a couple years ago.
You might have been member 1. You might be patient 1, man.
Well, if I go back and look, and if I am, I want you to number us so I can actually have. I'm going to hold on to that. I want to be 001.
We'll send you a plaque. Yeah, Phoenician League, it's an investment membership I launched in September 2022. And the name Phoenician League, it's a play on the ancient Phoenician civilization and the old Hanseatic League. So ancient Phoenicians, roughly where Lebanon is today, it was a commercial civilization back in biblical times. They were the guys, building boats and creating trade routes, and they'd go out to Asia and like trade for, the silk and the purple dye, and they'd bring it back to Europe. And they got out as far as we know, they got out as far as I think Ireland and Britain. And so they had these trade routes. And meanwhile, everybody else is running around and trying to conquer each other and take their stuff. And the Phoenicians weren't that. They were just trying to create a win-win dynamic in civilization. So I really appreciate that. And it was about, a lot of it was about the networks that they created. Hanseatic League, we're talking Middle Ages Europe, mostly in, I think, Northern Germany is where it was, although it wasn't unified Germany at the time. But it was a network of independent city-states. And so these states got together. They created their own code of law called the Lex Mercatoria, I believe it was. I'm probably butchering the pronunciation. But anyway, they created their own code of law. And it governed how people interacted with each other, how people dealt with each other in trade and commerce. And it laid out clear remedial situations for if somebody felt there was a breach of contract. Well, here's how we handle this in the Hanseatic League. and they operated independently of the nobles and the kings and all those. And again, same dynamic. You look at those kings, and they're always constantly trying to raise an army to go conquer somebody else, and it's just like just constant, just back and forth. And it's like, come on, man, why? And meanwhile, the Hanseatic League was about let's do commerce, let's have win-win organization, let's build each other up, that type of thing. So that's the name, Phoenician League. The idea, really, I've worked in the investment research industry, and while I immensely enjoy it, especially compared to my experience in the corporate banking world, what I've noticed over the years was that there's a lot of gaps in the industry that just within that structure cannot be accounted for. So for me, the Phoenician League is the answer to trying to take, my hope is that every member who comes in can come in no matter where they are with regards to financial literacy or background or anything, and get all the information they need to, number one, get financial security through asset allocation. We talk about infinite banking. In fact, Brian's been on a couple of times with us to talk to us about that. But we help people get a framework in place for creating financial security. Then we help folks start to build cash flow with these other investments. And so we've got a lot of training on this. But what we do that I haven't seen anybody else do is we get people actually plugged in to a larger financial professional network. And so we've got a finance guy, an expert for anything, a professional for anything. We get folks plugged into a turnkey real estate investment operation where you've got a single point of contact who's going to get you access to a property portal. He's there to answer any questions about the properties that are available. He's there to introduce you to property managers. We've got a master insurance policy, lenders, preferred lenders in the network. And so it makes investing in real estate as simple as sending emails. We do the same with other asset classes. We get people connected to the experts. We've got a great tax strategist who Neil really he's done tremendous work for me. And I know we've sent a lot of members, not a lot, but quite a few members his way. So we've got a great referral for taxes. We've got various attorneys that we get people connected to. So the idea is, it's great to learn how to do something, but if you can learn how to do it and then have somebody you can contact when you're ready to start doing it, and they can help you implement it, walk you through it, help you answer any questions or take care of any problems, so it's information and implementation is our goal with it. And then we've really attracted some high caliber people. So we do some monthly Zoom calls where usually it's geared towards a specific topic. There's sometimes we just do, open forum calls, but we have conversations. We each have different experiences, different skill sets. And so we can support each other and share ideas and information as well. So it started as something that I thought it was a good idea, but I had no idea if anybody else would, and I put it out there. But the feedback's been great. The retention's been really good. When people come in, very, very few of them then leave. And so at this point, we've really started to build more of a true network. And so now the question is, how can we make this even more of a network? And that's conversations that Brian and I have had privately. But I think there's still a lot of room for improvement too. But I'm very, very, very happy about what we have to offer.
Yeah, I think there's a lot of really cool things that we can do with that. But some things that you left off that I want to mention is you have courses that you've recorded on all of these things, from what is money, what is sound money, about how financials flows, about personal finance, asset allocation. Like it's probably, I don't know, I'm going to guess 20 hours worth of material.
It's close. I think it's 15 hours. Yeah.
15 hours. Okay. You have an infinite banking section that you recorded before we knew each other. It's awesome. And then I love, you send a monthly newsletter, which is always awesome. That just kind of shows what's going on in the world. You give your financial analysis of what's happening in the banks and Wall Street and the macroeconomic level. Those are always look forward to reading those.
I appreciate it.
The member calls you talk about monthly, like I'm just going to run through and talk about some things we've talked about on there is how to think about investing in the current economic climate. That was, during some of the towards the end of the shutdowns and everything. So when everything was kind of turned upside down, you had an expert to talk about that. Investment real estate. The best one you've ever had, obviously, was the infinite banking concept with Brian Moody.
Hands down. That found its way into the core content too.
Oh yeah, that's right. You used some of that, huh?
Yeah.
You've had precious metal experts, Bitcoin expert, real estate investments. Oh, that was an awesome one. The gentleman who bought in South America, Mr. Del
Yeah.
Rey. That
John
was a great.
Whelan.
Yeah. Yep.
He's such a good guy.
The rise of artificial intelligence, which cycles really matter, which economic cycles really matter, more real estate, alternate investments. You've even had hard money lending, cryptocurrency, mortgage notes, which you mentioned earlier, health and wealth. So there's just been some great discussions every month that have happened, and tax strategy, which we've had Neil on this. You've had a couple of recordings with him, so always helpful, man. It's a lot of value. It's a huge amount of value added.
Well, I appreciate it. It's become a labor of love. It's one of those things where I just kind of launched it just to see if it would work. But now it's something like, well, let's make this, a thing for decades. That's kind of my mindset. So I'm really fully invested in it, and constantly updating it, trying to produce the best quality with the newsletters, and really just, the other thing we don't do any silly marketing. I'll give presentations to audiences, but it's not the silly marketing where you have no idea who you're getting in front of. We're getting in front of very, very high caliber people. So
If Brian's the first member, I've got to be the last, the most recent.
I think you're second to last. I think one
All right.
person's come in since you have.
All right. Well, you listen to, like, everyone has like the list of podcasts that they listen to. You come across this information, you kind of make a mental note, or like I have a note of like to-do list of things I want to look into. And so if this is going on your mental list, like, oh, I should look into the Phoenician League, I would highly recommend don't wait. I have already got this book added to our reading list on the site, so you can go to our reading list, buy the book. I would do it right now, because this is something that Brian had been mentioning to me quite a few times over the last 2 years. And it was something that I always just said, yeah, I'll look into that. I'll look into that. That's on my to-do list to look into, but that to-do list is 30 things long. Jump this to the front of your list, because as soon as eventually Brian just sent me the book and I started reading it, I was like, wait a second, this is exactly what this is how I think. And this lays out a thesis that, going back to the Fed stuff that I've been thinking through, and wrote my little ebook, IBC and the Collapse of the Dollar. A lot of the point, without any context of the factions you talk about, just kind of a similar conclusion, something that I've thought through in a lot of detail. And then you lay it out here. I was like, wait a second, how have we not talked to this guy? And Brian's like, I've been telling you for 2 years, man. And so jump this to the front of your list of mental to-dos. Go to our reading list, buy the book. And it's just an awesome roadmap to that passive income. And then I'm excited. I'm going through the coursework right now, and I'm excited about people always ask us about, all right, I've done the protection. I've got my human life value captured with the policy. I've got my savings component. I've got this warehouse of wealth. I'm doing IBC. All right, what do I do? How do I grow it? And we're not financial advisors. We don't recommend stocks. We say what we do. We send people to Shane at RP Capital, who also is a referral from you. And so we've got what we're doing, but I'm excited because I do not want to delve into stock picking myself. The one time that I've recommended a stock to people, it just tanked. At least the one time in recent, since we've been doing this business, I have no interest in picking them myself. But I like that part of the Phoenician League, you have your portfolio of stocks that you're tracking, you monitor. Hey, here's a good time. Here's what I'm looking at. All right, it's time to get out of this when it hits these metrics, whatever. It's if you don't want to do, and if you don't trust yourself to do the stock picking, which I don't, this is a great way. And I plan to kind of emulate that portfolio and try to build out another column in my asset allocation model that I don't really want to do. I don't have the capability or the bandwidth to research myself. So if this intrigues you at all, get the book and really consider it. Like, jump this to the top of your priority list, because it's been awesome.
And I will say, even on the stock recommendations, what's awesome about it is you don't have what's that knucklehead on TV who it's always do the opposite of what he does.
Okay.
Yeah.
The Contra Kramer. Yeah.
We don't have this like daily stock pick. Like, you sometimes go months without saying, hey, I've been researching this and looking into this, and I think it's a good buy right now. So it's kind of nice, because it's not like this like stock trader, like, what's the pick of the week? I've seen you go 3 and 4 months and not even talk about a new buy. And then you're like, hey, we've got a good buy here. And overall, they've been really, really solid. So I appreciate that, because there's true due diligence,
Yeah, I really appreciate that, and it's one of those things where a lot of the companies we're investing in, you can safely just accumulate, month after month, if that's what you want to do. Of course, it depends on where you are with your own asset allocation model. But we're not investing in like, hey, there's going to be big news next month. You got to get in before then. We're interested in solid companies where the fundamentals are good, and the macro trend is in favor too. I think it's kind of ties into the macroeconomic stuff that we talk about. But I can't thank you guys enough for the all the kind words and
Yeah.
the endorsement. Really, really
Where can
appreciate
people
it.
find you?
So I've got a number of places. Probably the easiest thing, I've got just a personal author site set up at joewithrow.com. And there's links there to get on our email list for daily insights, which don't always happen daily, but we try to make a couple posts, at least a couple posts each week. You can get on the email list there. We got offer a couple bonuses to just some very special reports. There's a link there to the Phoenician League as well. A link to the book's website where we've got a couple of bonuses if you want to get the book through that site. And we also have a short course called Finance for Freedom as well. And there's a link from joewithrow.com. And that's just for folks who maybe aren't ready for the full membership yet or kind of on the fence. The course is just a single short course. You can go through it and I forget how much time. It's a couple hours, not that long, but it's really about the fundamentals. And so there's a link
Nice.
to that as well from joewithrow.com. And then of course, PhoenicianLeague.com is also a site where we house a lot of our work. So,
and we'll make sure that's linked in our show notes here. And one more little taste for the boys. Tell us where you're operating from right now, because I think that
yeah.
a lot of us are pretty like-minded in a lot of different areas, not just finance. So I think people would be pretty interested to hear your perspective, not just on money, but just on life in general. Where are you operating out of right now?
Yeah, you know what? I should have said that to start. I forgot because you see the exposed beams up here and everything. I was on a mastermind call a little while back, and we jumped on the call, and I could see one. You see the people, and one guy was just kind of like squinting and looking forward. He's like, "Joe, are you in an unfinished basement?" And I just had to chuckle. I'm operating out of my solar shed way up in the mountains of Virginia. So a number of years ago, we put up a smaller building, just one room building. I put up for my office here, and I was looking into electricity for it, and decided just to go fully off grid. So we've got a solar system here. So it's running 100% on solar, no central heat or air, which every now and then that's a little bit uncomfortable. We forget how privileged we are to have these modern HVAC systems. But anyway, we're totally off the grid on the office here.
That's awesome.
Yeah,
That's
and what's
incredible.
funny is today you were a little worried because as at the day of this recording, you guys have just gotten a foot of snow, you said.
Yeah, I was out there just before we got on. I was shoveling off the snow off the solar panels, trying to see if there'd be any power generation happening. There's still not. So I got to be very conservative with my power use when there's no power coming in. We do have a couple batteries, but they only go so far. So I'm chuckling because I'm in the mountains of Virginia, and Dominion is the utility company, and I see in certain parts of along the highway, they've got rows and rows, I mean acres of solar panels to produce power for the electric grid. And I'm like, there is no way those things produce. I mean, for 3 months out of the year, maybe four, they're not producing hardly any power. Like that is such a boondoggle. But of course, they did it to comply with, the whole Great Reset initiative, the Net Zero initiative. That's kind of part of this whole thing. This is why we also got into the energy related investments in the Phoenician League, because it's like we're never going to net zero, no, not without a massive jump in technology or civilizational collapse. So
One of my buddies, Brett, always he talks about there's really only two industries in the world, and it's farming or agriculture, and then mining and minerals. And everything we do depends on those two. Every
yeah,
single other industry out there depends on those two things, and you can't name a single industry that doesn't need or require food or energy. That's it.
yeah,
Mining and minerals. You know what I mean? So it's pretty wild when you boil it down and you're talking about one of them. We're never going net zero. We can't
doesn't
exist
work.
in that plane.
I mean, maybe if you're in like a tropical climate, but that's not advanced civilization. That's specific to that one single area. But it's funny
Yeah.
you mentioned that. There's a lot of wisdom in that too. And then you think about, these solar panels on my roof, they are made from, all kinds of metals, including rare earth metals that have been mined out of the ground somewhere. These things have a useful life. Today, they're pretty good. They might last 20 years. They are loaded with toxic chemicals. So when
Yeah.
they don't work anymore, they're going to go to a landfill and they're going to leak these chemicals into the environment for probably, 2 or 3 or 4 centuries. Like there is nothing green, there's nothing clean
No.
about solar energy. Same thing with windmills. There's things like you read these reports, like they're massacring birds that accidentally fly and get chopped up by the solar, and they're just massive things of concrete that is, has to be, heavily resource intensive. And then they don't degrade. Like those things are just going to sit there for
Gosh.
centuries. And like,
And they're
a
an
thousand
eyesore.
years from now, people are going to be looking at these big concrete pillars. They're like, wonder what that was for.
Yeah.
And they're
Yeah,
hopefully
yeah.
they're going to think better of us than wait, they had energy that worked and then they wanted to use this other energy that didn't work that well. Strange civilization that was.
They're trying to change your genders. These people are off their rockers.
Yeah. Oh man, what's this? Looks like a man. Is that a pregnant man? Oh wait, we read about this guy, Bill Gates. Yep.
Yeah.
Okay, Bill Gates. You guys know what I'm talking about?
Oh yeah.
But yeah, back when they were pushing the whole men can have babies thing, and then Apple created the pregnant man emoji,
Yep.
and then all of a sudden a tweet from Musk, Elon Musk puts out a tweet, and it was like that pregnant man emoji and Bill Gates side by side, and I looked at it, I was like, oh well, maybe it is possible. I don't know. Anyway.
Well, hopefully all that stuff's all dying an excruciating death as people come back to common sense. But anyways,
I'm optimistic. We'll see.
This has been awesome, and we can eliminate it in our lives, even if it's CNN is still gonna advertise to like the airport passerbys who is their only audience now. They can say whatever they want, but it doesn't have to affect us. We can just observe reality and act within it and take back control of our situations.
Absolutely. The more of us that are in that boat, especially if we can start to network with each other, whether it's financially or otherwise. I mean, we can create whatever civilization we want. We don't. It just takes takes work. So
right.
and mindfulness. But anyway.
All right. So right before we close, is there anything you wished we'd have asked you?
Man, I'm just thrilled to hang out with you guys. I could stand up
All
here
right.
and talk for 2 more hours. So thanks so much for having me on. I really appreciate it. And just thanks to everybody who took the time to listen to me ramble today. I hope there's been at least a few things in here worthwhile.
Oh, I definitely think so.
Yeah, it's been
I
awesome.
appreciate you coming on, man.
Nope.
Cool. Well, thanks guys. Hope you have a great afternoon here.
Likewise. We'll talk soon.
See you, Joe. Thanks.